Now we walk through the students with some transaction analysis to understand how we use the accounting equation. So we have a simple illustration which you can see on the slide presentation. We start with transaction number 1. Transaction number 1 is investment by the owner. We must understand when we start a business, the owner investor has to put cash into the business in the form of a business bank account. So how do we record this transaction? On the left side, we will see an increase in assets, which is the cash coming into the business. And on the right side, we will have an increase in the form of equity, which is investment by the owner. So this transaction shows the investor invested $15,000 to start the business. Assets go up by $15,000, equity increases by $15,000, and the equation is in balance. Now we move on to transaction number 2. The owner decided that he will buy $7,000 of equipment for cash. So what happens here is we will take out $7,000 cash, which will be a minus to the asset side of the equation, and we will have a corresponding $7,000 increase for another kind of asset, equipment, to ensure that the transaction is in balance. Let's move on to transaction number 3. The company decided to purchase supplies on credit. Credit is to be understood as buying something today and paying it tomorrow. So this transaction creates an asset, supplies, which goes up on the asset side. And this transaction also creates a liability which goes up by $1,600. So the asset side matches the liability side and the equation remains in balance. Next, we move on to transaction number 4. Services performed for cash. The business has performed services, so the asset cash goes up by $1,200, and revenue on the right side under equity goes up by $1,200. Moving on to transaction number 5, purchase of advertising on credit. Here we increase our expenses, and it has a corresponding liability of accounts payable for $250. Another way to understand this is I have some expenses which I must record under equity as a negative, and I must record liability as a positive because I have to pay this liability tomorrow. Moving on to transaction number 6, services performed for cash and credit, $3,500. The cash that I receive is $1,500, and the bills on account is $2,000. So here I will receive cash, so my assets goes up by $1,500. I have another asset which is account receivable, goes up by $2,000, and on the right side under the equity my revenues will go up by $3,500 to balance the equation. Transaction number 7, I paid some expenses in cash, office rent, wages and utilities for a total of $1,700. So my cash is reduced by $1,700, and my expenses is also increased, but it's shown as a negative So again, my equation is in balance. Moving on to transaction 8. Transaction 8 incidentally is related to transaction number 5, where now I have to pay my advertisers $250. So I will reduce my cash by $250 and reduce my liabilities on the right hand side by $250, and it keeps my equation in balance. Moving on to transaction number 9, I receive cash on account. This is related to transaction number 6 earlier. So from the 2,000 on credit in transaction number 6, I will now receive $600. So I will increase my asset cash by $600 and reduce my account receivable by $600. And my accounting equation remains in balance. Now we look at the last transaction, which is transaction number 10, withdrawal of cash by the owner. So here the owner has decided to take out cash, which is shown as a net minus on the asset side, and a corresponding minus on the drawing side under equity. For the benefit of students, you need to understand equity has 4 parts. Equity comprises the owner's capital, the owner's drawings, the revenue and expenses. The owner's capital and revenues increase the equity account as denoted by a plus, and owner's drawing and expenses are a minus to the equity account as denoted by minus. So the net effect of the plus and minus represents the balance in the equity account at the end of the financial period.